everybody. Welcome to Trader Merlin Show. It is your Thursday edition. Getting to the tail end of the week. A great day. Actually, especially the way that we moved off of that GDP data, which is going to be the focus for today. Thank you for those that sent in questions. Liz, I believe if you're here, I got one of your questions that was sent to the YouTube channel, so I'll get to that one as well today. Hopefully the audio sounds a lot better today. Yesterday I noticed it was super low. So for some reason, every time I restart this computer, which I try to do because of the heat and just wear and tear on the system, it resets my microphone to super low. So now part of my routine will be making sure every time I reboot it, my volume on the mic is much higher. So hopefully it sounds a lot better for you guys today. And my annoying voice comes through loud and clear. So let's talk about the latest GDP data. Obviously, gross domestic product is not a direct focus of the Federal Reserve. However, it is impacted by the decisions of the Federal Reserve. And of course, we want to see GDP increasing. We like to see it growing and going higher and higher and higher. However, the numbers that came out today, not good. It's the first time in about a year that we actually had a contraction in GDP. And this is the final version. So this is bookmark it. It's not getting changed now. There's no revisions to this one. So I'm going to zoom into post-pandemic, at least the tail end of it. And you can see back here in June of 2022, as well as September readings, those two back-to-back negative numbers for final GDP. And lo and behold, we have our first one here. Now, expectations were we're going to come out at negative 0.2, and we came out at negative 0.5. This is not really a good thing. Now, of course, we can point the finger to the tariffs. We can point the finger to global tensions, and fine, we can have one-off data. The good news for all of us here is we do have 3 months before we get the next one. However, as soon as we get they're blaming tariffs. Obviously, they're going to point the finger at anything. The concern is not right now, but if we go out another, 3 months and get to the next reading, the final reading of GDP, then what that means is the media will now run with the story of we are in a recession. Now, keep in mind, they also did that back in 2022, and we can look at the chart here to see what happened back in 2022. Let's just show you right now. So if you go back S&P 500, I'll scroll over here to look at 2022. Come on, Merlin, way back there. Come on, let's get that data prepped up and running. 2022, get rid of that line. And we'll start things off in January. So I'll put a little vertical line on your screen where January starts of 2022. And you'll notice the markets took a pretty steep decline for most of 2022. Right, you can see here, going back to January, the S&P was at 4763. As you got into the end of the first quarter, we were down around 4100. It rallied a little bit, but continued to drift lower. So it is certainly something that the media will precipitate this narrative of we are in a recession if we get another one. Now, again, we don't have to worry about this right now. Don't worry about it yet. Well, Oliver says they didn't call it a recession back then. They didn't call it a recession. It was never officially labeled, right? It has to be, what's the agency? Is the Bureau of Labor Statistics or Bureau of Economic something? There's some agency who's the official anointer of the recession and depression statements. And yes, they did not call it that. But what did the media say? The media said, we are in a recession because we've had 2 consecutive quarters of negative GDP, which is the talk track that all most market participants will use. Unfortunately, we didn't get the stamp of it, and markets, apparently we are not in a recession. However, it does not change the fact that in 2022, we had negative GDP and the markets took a pretty big nosedive. Not saying that that's what's going to happen, but it is kind of a, historical data does give you information to work with, and this is not a good sign. Not a good sign. Now, why did we have the move we did today off of GDP data? Well, remember, Jerome Powell, if you look at their dual mandate, and I feel like I'm just beating a dead horse here because I say it all the time, but he's got, I'm pretty sure Merlin called it. I don't think I did. You have unemployment staying fine, and you have inflation for right now, textbook, under control according to the data. So if those two things are fine and GDP is declining, it is a huge green flag for Jerome Powell to cut rates and step on the gas, right? It's not his job to keep GDP up. However, if everything else on his mandate is fine and he knows cutting rates will impact GDP most likely to the upside, then step on that pedal. So the numbers here, we'll go back to the CME Fed Funds futures, changed. They changed dramatically over the last 24 hours. And it's not the July meeting, right? It's still the chances are no rate cut in July, but where it really starts to shift is near the end of the year. This was the huge shift in the last 48 hours. You go back 3 weeks, 3 weeks, it was 2 rate cuts by the end of the year. Now there's a 47% probability that we're going to see 3 rate cuts by the end of the year. That's not, obviously that would be fine for those of you who are bullish on the market, but to me, that anticipation of 3 rate cuts should send a message to you that market professionals, and I hate to use that word, but the people who are trading these Fed funds futures are anticipating weaker times ahead. Now, I'm still going to remain in the bullish camp for right now, because how can you not remain in that bullish camp when you see charts that look like this, right? Screaming to the upside. The future side of things, we were at all-time highs today, so we broke through. We're at all-time highs on the futures, but the SPX, we are just a couple of points away from all-time high. Our closing price today, 6,141. Our intraday high, 6,146. And the all-time high, 6,147. We were like 1 point away on the SPX. So close. So I think that the reason you saw that surge today is the market participants going, uh-oh, GDP doesn't look good. And oh, wait a minute, Powell's going to save the day. Because normally, I think you'd all agree, when you have a piece of data that shows that big of a drop, I mean, that GDP number was not a pretty one, especially, we've seen it, the last number dropped just a little bit, but we were still at 2.4%. That's growth. And all of a sudden, we show no growth, decline in GDP. How much of this is impacted by the tariff issues? I don't know. I did not dive into the reports. If you wanted to, you could actually break it apart and dig deep into the report that came out. You can find that report right here. Bum, 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 bum. Right there. It's the Bureau of Economic Analysis. The BEA comes out with that GDP report, and I think that is actually the same entity that will determine whether we are in a recession or not. So you can download the latest release. It's right here. It might actually be in a PDF. So there you go. Q1 GDP report right there. Just click it, download, it'll tell you all the different information. And I haven't had time today to look at it, but I would like to see in there, which market segments are doing better, which market segments are doing worse, and kind of what does that mean for us going forward. Bottom line is, it paints a fairly negative picture of the economy. And of course, with all the uncertainty and turmoil going on, no big shocker there. It was Biden GDP. Who knows? I'm not going to point the finger at anybody. It's hard to have a recession with almost full employment. I agree, Les. I agree. It's hard to have a recession when you have a full employment and, things and inflation's under control. Now, this opens a whole nother door, which is the dollar. So we have GDP declining, and one thing I want to discuss today a little bit is going to be the dollar decline. So I asked my AI to I said, show a picture of the dollar in decline looking really sad, and show commodities like gold and corn and soybeans and metals all looking very happy. And this is the image I got. I don't think AI quite understood my prompt, but it's not what I wanted. Anyway, we'll talk about that dollar index here real quick, because to me, this is going to be a much bigger story. It has been the fact that we've been trending down on that dollar. And I'm going to put this on a weekly just to see the bigger picture here. Hallelujah, Bob Dunn. I'll call the weekly chart the Dunn chart. And you'll notice that if I zoom in over here into 2022, I was really just picking the tails from, March, pretty much all of March last year. We bottomed out on that dollar right around 97.69. And so I'm kind of using that as the floor there. I break this down into daily time frames. That's why I have this lower level for the dollar index, which is about 93.50, is the very bottom of that demand zone. So, but that's done on a daily, not a weekly. Now, if we zoom back to our normal markets to get an idea of where we're at, we've been above that for a long time, and lo and behold, we came screaming down to it. We bounced for a couple weeks, and now we're officially below it. So this tells me, at least I believe, that that trend is going to continue and continue selling off and going lower, pushing this dollar index down to possibly that 93 level. Now, again, what does this mean for the market? It's that three-dimensional chess, if you will, where, okay, the dollar breaks down. So I want you guys in chat, just type in, if the dollar continues down, write what you think. And it doesn't have to be a long paragraph, but what might be impacted positively and what might be impacted negatively, right? And that just gives us our opportunities of where we can play. So if this dollar continues on this chart and goes from right now 97, which is that break that we've been looking at, all the way down to 93, what will be the impact on whatever market you guys choose? You can talk about commodities, you can talk about the S&P. What do you think is going to happen? Type in the chat. I'm curious what you guys think. Jeff says, everyone's a bull now. Hard not to be, right, Jeff? Hard not to be. Jimmy T says positive. Well, there's certainly things, Jimmy, they're going to be positive and things are going to be negative. Les says equities might go up. Yes, right? Because people can buy more U.S. equities. That dollar's cheaper. Someone from China or Dubai or Europe can buy more goods and services. So Andy says commodities up. Absolutely. And if you look at what's been going on with commodities lately, let me go down here to my futures side of things. Here's palladium futures. So over the past few weeks, palladium's gone from about 888 up to 1100. Nice move. Platinum going absolutely nuts right now, which is crazy. Platinum was about $900. Now it's $1,400. Copper, not a huge move, but still moving up. Silver has been on a great uptrend. Nickel, not that big of a deal. Not so concerned about nickel, but you have other things too. You know, you talk about some of these commodities. Some of them are going to be impacted by this dollar move. And, you know, I'm not going to run through all of these, but you know, these commodity markets like sugar, well, that's not necessarily impacted by the dollar, but really metals are the ones I'm going to be focusing on as being propped up by that. Chris, good to see you, Chris. I think you need to go from 327 to 350, right? I thought the 350 was a better motor than the 327. That's what I was always told. He says Bitcoin goes up. Yes. So what you may see is a rotation of capital moving from, obviously, it moves from one location to another. If people are looking at that dollar, let's bring up that dollar index again here real quick because that is what this is all predicated off of. If you look at that dollar index, this is a weekly. So for the last year, pretty much a year. Well, it really started back in January of this year. The dollar has been in an aggressive slide. This is a weekly chart right here. So this is an aggressive slide to the south side. In the bigger picture, you know, it's been kind of chopping sideways, hasn't done too much. So this is really indicating a lack of faith and interest in the U.S. dollar. That money, big institutions who are holding large amounts of dollars will rotate out of dollar-denominated instruments and move into other things. And I do think that that could be a catalyst for Bitcoin. As you guys can see here, this last week, kind of coinciding with the break to the downside on the dollar, you saw Bitcoin have a big surge. Now, there's a lot of other factors driving Bitcoin, but I do agree with you, Chris. I do think that the weakness in the dollar is going to cause people to go into another instrument that has more upside potential. Right? They are making more Bitcoin. They're making 450 Bitcoin per day, and all that's being consumed already by the mining firms and the treasuries that are popping up all over the place. Whereas the dollar, they can keep printing more and more to pay off our debt, et cetera, and that is part of the dilution of the value of the dollar. So that dollar index, guys, to me is really important. I'll probably make a much bigger point of it on this program, but it looks to me like we're headed significantly lower. I'll see if I can stretch this out here. I'll do it later when I can zoom in. But yeah, if we get down to 93, I do think that the equity markets are going to have a break to the all-time highs. And conveniently, if you look at this chart, it's almost the inverse of the S&P, right? The S&P's chart looks very bullish right now. The dollar going the opposite direction. S&P at all-time highs or near all-time highs, and the dollar index is breaking lows that we haven't seen for almost 3 years. So not looking good. Let's see. Store prices. I'm not sure what you mean there by store price every day. What else do I have on here? Stocks rise when the dollar's weak. Yep. Historically, right? There's never 100% correlation, but historically, stocks rise when the dollar is weak. And I think that that's that rotation of assets. Money will come out of the dollar, go into equities. People start selling dollar-denominated assets. Of course, equities are dollar-denominated, but they'll start moving more into the equity markets. And again, that does open up foreign investment into U.S. markets to a much greater extent. One of the reasons I traveled to Europe a couple years back was because the dollar gained so much strength against the euro, I could buy a lot more while I was there. One of the reasons I love going to Thailand is the dollar, and actually it's not looking so good right now because the dollar sucks, but if you go look at the Thai baht, let's go look at the THB. Do I have it on here? There it is. Historically, the Thai baht has been pretty weak against the US dollar. Yeah. Obviously, back in here in 2004, 5, when I first went to Thailand, you were at 42 baht to the dollar. That was amazing. Now it's only 32, and it's dropping a lot. It was 38 just a couple of years ago. So the US dollar is buying you less and less baht. So the baht is actually getting stronger. But that's one of the main reasons I went there. It's because I know I get more money. And this could help boost the US economy. If the dollar continues to fall against major currencies like the euro, let's take a picture of that euro. If you notice what's happened with the euro over the past few months, really all of this year, from the bottom to the top, right where we're at right now, the euro buys you almost 15% more than it did in January. So if I'm a European citizen, I'm looking at this saying, hey, you know what? Regardless of whether we love or hate America, it doesn't matter. Now's a good time to go to America. I can buy 15% more. And if you're thinking, oh, well, it's just the euro, well, look at the British pound. Similar situation. From the bottom to where we are now, almost 14% increase since the beginning of this year. So yes, this does open the door to more people coming to the United States. This brings up more consumption as well, because if you're an exporter in the United States and you make, you make widgets that is used by Europe and they want to buy more, they'll do so because now they can buy more for the same amount. They can spend, 1,000 euros and buy a lot more because the dollar has fallen so much. So it really could help exporters in the U.S. Now, this is, again, that 3D or 4D, we'll call it 3D chess. If you are thinking that this dollar trajectory will continue to the south side and the euro is going to continue to get stronger, so here's your dollar index. If you think this is going to keep on going, as I do believe it will, then I think it's important for you to look at companies that you feel like investing in that are exporters. Like whose predominant business is exporting to foreign countries. They will probably see a pop in sales because, again, customers can buy more for the same amount of foreign dollars, depending on which currency. The British pound, the euro, all looking very strong. Pretty much, if you look at the US dollar against most currencies, it's terrible. Here's against the yuan, but nobody really pays attention to that. Here's the Vietnamese dong. So if you want to go on vacation, Vietnam is still the place that you want to go. I mean, look at that chart. It just keeps on going up. The dollar buys you more and more and more in Vietnam. That is the way to go. You want to go by the Indian rupee? Still a pretty good uptrend for the past couple of years, but not making new highs. You want to go to Japan? Well, the dollar's not buying you as much as it did back in 2024. Swiss franc? Nope. US dollar's cratering against the Swiss franc. Canadian dollar? We're falling apart. Rubles. How are we doing against the ruble? The ruble is actually gaining strength against the US dollar. Believe it or not, the ruble, with all our problems with Russia, the ruble is up 45% since the end of last year. Pretty crazy. Anyway, I could run through them one by one over and over, but this is something that certainly will impact some of you. If you're long-term investors, great. It could give you signals as to where the markets may be in the intermediate term as well. Again, I do think it'll be a catalyst for higher prices going forward. We'll have to wait and see what earnings do. Let's see. What do we have? I know, Lisa. The ruble. Of all things, the ruble. What else? Sorry. Coach said bonds go up. Yes. Well, bond prices go up, not yields. Right, Koja? When you say bonds go up, there's two things there. You have the premium price, right? What's the cost for that bond? And what's the yield? So if you have more dollars, right? People are buying dollars, or if the dollars are cheaper, you can actually buy more U.S. bonds with that. So more demand for bonds causes those yields to drop. So the price of the bonds go up and yields go down. Yes. Look, VB says banks strong. I think the banks are going to be impacted more by regulation changes. There's talk about several different regulations that the Trump administration is going to remove on banks, which would cause them mainly liquidity requirements, which there's a reason we have reserve requirements in place, is to protect the consumer so that banks don't take too much leverage, overdo it, and get caught with their pants down in bad trades. Just like, Lehman Brothers maybe. Maybe Bear Stearns is another firm. But let's remove those guardrails and protections so we can help the economy. What could possibly go wrong, folks? And the underlying the reason the dollar is weak, it's a good question. I don't think I could pinpoint it down to one specific thing, Margaret. I think it has a lot to do with our how do we say this politically correctly, just the hornet's nest we've stirred up with the world. The whole tariff piece, I think, has a lot of the world looking at America going, you big bully. We don't want to do business with you. We're tired of you. And that is the perception. I know that we have a lot of patriots in here. I am a patriot as well. But if you go internationally, you will see a lot of people feel that America is the big bully. And I think that the recent actions, not just, our involvement with Israel and Iran, but mainly the tariff piece, I think has a lot of foreigners kind of frustrated with the United States. And maybe that has part to do with it, just a lack of credibility. But I don't know. Jeff says, I would love to go to Thailand. Yes, you would. It is the greatest place on earth, I think. Obviously, there's bad parts. There's some things I don't like about Thailand. But man, the people, the food, the culture, just the weather. It's a little hot, a little muggy. But you don't need to own a jacket. No one owns a jacket in Thailand. It's just why bother? For them, a state of emergency would be like 60-degree days. Like, oh my gosh, calling the National Guard. We need blankets for people. It's 60 degrees today. For you East Coasters, you can't relate to that. Sure, JD, we'll go to natural gas in a second. Does decline in the dollar have any effect on the price of crude oil? Absolutely, Gilbert. We just mentioned what areas might be impacted. The crude oil is priced in U.S. dollars, right? So if you're buying oil, and that's for now we're hearing more about Saudi Arabia, Middle East countries accepting other payments other than dollars for crude oil. But because we're the reserve currency, the dollar is what you buy crude oil with. So in principle, a EU country, let's say Germany wants to buy oil, they'd have to convert to dollars, buy oil with that. So that creates that demand side of thing. If the dollar continues to drop, that euro from Germany can buy more dollars and they can buy more oil. So yes, it does drive the prices of commodities up, which is why I think you'll see gold, platinum, palladium, silver. I think if we continue that dollar slide, we'll see those move to the upside. We will see the equity markets move to the upside, and I think you'll see bond yields drop. So it's a major piece. This is not like a small thing. This impacts so many different markets. Imagine if the Saudis accepted Bitcoin. Look, I don't know if you guys saw this, but the chairman of the Federal Housing Finance Authority, the one that sets the rules for... there we go. Thanks, Big Eb. You led me right to it. He says, what's the deal with the FHA and Bitcoin? So it's the FHFA. It's the Federal Housing and Finance Authority. It's the one that basically sets the rules for Fannie Mae and Freddie Mac. Let me see if I can bring it up for you. I think I actually have it. I hope I do on my downloads folder because I downloaded it today. It's been going viral. Do I have it here? No, I'm sorry, I don't have it here. But basically this document, oh, there it is. Let me bring it up for you guys. We'll go full screen on this. Here you go. So this document right here, this is the U.S. Federal Housing. It's the FHFA. I'll zoom in a little bit so you guys can see. It says, in regards to an order issuing directive to consider cryptocurrency as an asset in risk assessment. What does that mean? Well, essentially, in a nutshell, what this is saying is, if you have cryptocurrency, could be Bitcoin, could be Ethereum, could be other things, it should now be considered as an asset when you fill out your loan application. Whereas before, not necessarily, right? Because I could keep my crypto in cold storage and just attest to it. Say, oh, yeah, I've got 50 Bitcoin sitting at home. That was too risky for them. So now what they're saying, and if you look right here, this is the paragraph. See if I can read it to you specifically. Here we go. Each enterprise is directed to consider only cryptocurrency assets that can be evidenced and stored on U.S. regulated centralized exchanges, subject to all applicable laws. What does that mean? That means I hold most of my cryptocurrency on cold storage, right? These are on devices that I control every aspect to it. It's outside of government control, no exchange. What this means here is it can only be counted as collateral if it's on Coinbase, Kraken, Gemini. It's got to be on a regulated, centralized exchange. So, if I were to need to prove assets to qualify for a loan, what I would have to do is I would have to send my Bitcoin or whatever over to Coinbase and have it sit there for a couple of months, right? You can't just deposit and, like most savings accounts, you can't just deposit 100,000 and go, oh yeah, I got 100,000. They want to see that it's been there for a few months. But it's not perfect, but I think you would all agree it's a huge step in legitimizing cryptocurrency, which has been the theme for the week, right? So I'm slouching over here. The theme for the week ever since last week when we had the Genius Act go through. Great step for legitimacy. Now all of a sudden, you're starting to see it is an asset. And this is the FHFA basically saying, we believe that this is an asset that's worth value. Whereas Jamie Dimon says it's a joke. He keeps doubling down on it, says Bitcoin's a scam. This is a federal agency saying, we'll accept that as collateral. Now, they haven't accepted it yet. It's a proposal saying, we request that you look into this, accepting it as an asset. It hasn't been signed, sealed, delivered. This is just the... It says this order is effective immediately and should be implemented as soon as reasonably practical. So they're going to do a little bit of research, right? They're going to do a little bit of research, and most likely that will be the case, as now we can use this as collateral. Awesome, right? Man, this should be great for a lot of you, especially if you don't want to sell your crypto. Like, I don't want to sell my crypto. But if I were to look to buy a new home, I can now prove I have all these assets. I can't, because most of mine is on cold storage. I have a little bit on exchanges. But if I felt like I was going to buy a home here in the next 6 months, I would move my Bitcoin over to Coinbase, let it sit there and prove that I've owned it. I can bring it up as a official asset on my back end here to help me get a better loan. Pretty phenomenal. So we're getting there. And Tofi, yeah, no cold storage crypto, unfortunately, not now. And just think about it. I could bring up a screenshot of my ledger, and I could modify the numbers. So yeah, it makes sense why they want on a centralized exchange. I totally get that. Let's see. Wow, what a scam. I wouldn't call it a scam now. You mean a scam because they don't allow cold storage? Because they just don't know that it's yours. That's the problem. If you do cold storage, they don't know that it's yours. You could make up any amount you want. You could point to a fake address, right? So if I was to do, one second. If I was to do a home application and they said, oh, well, where's your Bitcoin? Easy. I would go, okay, here's my, one second, let me bring it up. I'd say, I've got a bunch of Bitcoin, and here's my wallet right here. All right? Oops. Here's my wallet. I'm this address. This is, oops, you can't see it. This is my address right here. This BC1 big number here. Oh, that's my wallet. Yeah, I'll prove to you guys on it. And I've got $8 billion worth of crypto there. I need to qualify for a $50 million loan. Right. How do they know that this is mine? I'd have to give them my private key, right? Not a chance I'm giving my private key to an $8 billion wallet. So that's why cold storage, you can't, and I understand it. It's BS, but it makes sense because anyone could lie on their documentation and say, oh, that's my wallet. I've got $8 billion worth. No, probably not. What's Sophie say? Can I put my uncle's cold storage Bitcoin portfolio to my Coinbase for 2 weeks and get that report? Well, I think I'm not qualified to answer that question. It's not set up yet, but I know that when you qualify, when you go and do a loan application, they don't just ask you for one bank statement, right? It's the past 3 months bank statements. They want to see that money has been there, not that you just had somebody deposit, $1 million in your account and then take it out the next day, right? They want to make sure that money has been there and you've been holding on to it. So my guess is they would want it there for 3 months. But yeah, if you want to take your uncle's cold storage Bitcoin and move it over there, fine. And then just move it after, I would say 3 months before you're going to buy that house or fill out the application. I said, Merlin, did you hear a law in California passed where if you haven't used your crypto account for 3 years, they have the right to take your unused crypto? Yeah, that's kind of taken out of context. I did see that they're trying to pass that through. There was a justification for it, and I'm trying to remember exactly what it was. It's not like if it sits there at Coinbase and hasn't moved, they just take it. It's very akin to, I forget what it's called in California, but if when someone dies, assets are there that sometimes people don't claim, and that gets put into these claims in California. That's what that's intended to do. It's saying it will include crypto assets there, but if you have Bitcoin sitting at Coinbase and that Bitcoin has not moved for 5 years, right? Let's say it hasn't moved for 5 years. they're not going to just take that. They will issue an email and say, are you still there? Is this person still there? And if there's a proof that person is deceased, then yes, they can seize those assets. They're not going to just randomly seize it, right? There's definitely notifications that would get sent out through Coinbase saying, hey, this hasn't moved in X amount of time. The state of California believes this is unclaimed property, so they're going to hold that over there in custody. It's not like they're going to just start seizing Bitcoin. I think that was taken out of context by the media. Yeah, it would be held in probe, but they would also, it's not probate, it was called unclaimed assets. There's actually a website you can go to and type in your name or social security number, and it will tell you if there's any unclaimed assets in your name. It's pretty crazy. Gilbert says, who would benefit from exchanging crypto into centralized sites for cold storage, ultimately, from cold storage? It's not about who benefits, Gilbert. It's about credibility and believing that those assets are real. So if I'm a lender and you tell me you've got $50,000 worth of Bitcoin on a ledger device, I don't care because I can't prove that, right? You can give me an address and say, well, this is my address on my ledger. Can you see I got $50,000 here? I can't prove that that's yours. There's no way I can prove that that's yours unless you give me the private key and I move some and go, yep, you have that wallet, right? Which you would never do. So by them saying centralized, they can now go to Coinbase and verify that those funds exist, just like they would verify through a bank and traditional financial system. So that's the justification. And I know people here are all upset about it, and a lot of people are, but it makes sense. I hate to say it. It makes sense that you have to go through a centralized exchange. But who would benefit would certainly be Coinbase, right? Or the centralized exchanges, because you're moving your assets to them to hold them. It says, right, when you move your crypto, it's not free. Sure, you're going to pay transaction costs. But, transaction costs typically aren't thousands of dollars. It's, depending how much you move. Bitcoin might be 10, 15, 20 bucks. No big deal. All right. I guess that's good questions there. Let me, I just want to make sure I got through all your questions. I think I got through most of them. If I didn't get to your question, retype it in the chat so I can go through it. I don't want to spend time digging there. Let me go to one other thing. Is Nike an underrated buy right now? So they came out with earnings. Let's real quickly go and check out their earnings calendar. I don't think I have it up here. Let me bring it up for you guys so we can check out that. They came out with earnings today, and the earnings look pretty decent. I didn't read it. I haven't followed their press conference at all. But I mean, they were supposed to make 12 cents. They came out at 14 cents. So they beat on their earnings announcement, and we're down 2%. So I guess the question, which you're asking, Hendrik, is if I go to NKE and say, is this undervalued right now? I'm not a fundamental analyst. This is a weekly time frame, by the way. I'm not a fundamental analyst. Nike is, one of the biggest shoemakers in the world. There still is this dark cloud over them, right? The dark cloud is the vast majority of all of their products and services are coming from China, India, Vietnam, or Thailand. And all of those countries are in the midst of trade tariff talks with President Trump. Now, I don't know the status on Vietnam and Thailand. I think that they actually came to an agreement, which would calm this a little bit. But until that is out of the way, I'd be skeptical on this one. Now, do I think personally that Nike's undervalued? Yeah, I do. Am I buying any right now? No, I'm not. And I don't remember. I think we talked about this in the past where I was looking to buy it at 60 because that was this tail that goes all the way back to 2020, the COVID lows, and we rallied or fell all the way back down to those lows. And I think that this is a weekly. That might actually be, I might have sold puts there. It's either there or 70, and I was selling puts there and played the bounce on it. But if you're going to be buying Nike, it's $60. It's right now it's $63.80 in the after-hour session. You've just got to be ready for more pain. Your mindset really has to be long-term, right, Hendricks? It's not going to be a day trade here because the trend, which, my favorite mantra is the trend is your friend till the bend at the end. And I don't care what indicator you're going to put on this chart. You want to put on a 200-period moving average, it's going to be down. 50-period moving average, it's going to be down. 20-period moving average, it's going to be down. Trend line, it's going to be down. Here's your 50-period. Is that a 50? That almost looks like a 20-period moving average. Let me check and make sure that. It's a 50. You go to 200. I mean, these are all telling you down, 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 down. Do I think that Nike's going to get back up to $170? Not anytime soon. Certainly not anytime soon. To me, it's a fairly risky proposition to jump on this one. You're definitely bottom fishing or trying to bottom fish if you try to buy Nike. Look, I like the company. I've always been a fan of Nike, or Nike, however you want to pronounce the damn thing. I would say if we broke this high, I would start maybe adding to or start building a position. The high from last Monday, June 9th, or 3 weeks ago. That high from June 9th is $64.85. So maybe what you do is you look to buy on a breakout above 65. Or if you're looking to buy right now, I'd be selling puts, and maybe you could get some nice premium for selling at 55 strikes or somewhere in there, and just keep doing that until it breaks above 65 and then go long outright. But these are all looking pretty bad. Let me see what the 20-period moving average looks like. That should be sloping down too. Yeah, I mean, they're all sloping down no matter which one you use. So the indicators are telling us heavy downtrend does not look very good. So I would shy away from it, but I would argue that there's certainly been worse times to buy this one. And when it's down, 50% off of its peak. Actually, it's actually well over 50%. I think it's down like 70% off of its peak at current levels. 1 second as I bring that up. At the price it closed at today, Nike is down 65%. So yeah, I do think that there's some value there in the long-term side of it. It's just, I don't want to tie my capital up in this one because it just feels like the trend is still down. For me personally, I'd rather find something that's going to give me at least enough premium as an options seller to make it worth my while to sit in something that's going sideways, or I'm going to buy outright and try to join a trend either strong to the upside or strong to the downside. Would I short Nike here? No. Even the trend is still down. I'm still just I would just leave it alone. And Margaret brings up a good point. She said that last drop was real strong. It was. I mean, if you look at this fall here that happened in February of this year, that was aggressive. I mean, this was a very big, she says ERCs, they got expanded range candles. I mean, that's a great sign of just panic. Now, in that little window of time, in 1 month, this thing fell 36%. Could it happen again? Yeah. Right? And what could cause that? Well, if President Trump flares back up and says, hey, you know what, Vietnam and Thailand, we didn't like the deal that struck, or you haven't signed, we're going to put reciprocal tariffs on you right away if you haven't signed the deal. And that could happen July 9th. So, it's all about your risk appetite. If you're one, Hendrik, and you're like, I'm thinking for the next couple years, I'm good to hold it, you just got to be ready because this could drop to 50, could drop to 40. It could. Will it? I don't know. There's always that possibility, right? I mean, you look back, when's the last time this thing was at $40? 2015. Oh, actually, no, even earlier than that. In the $40 range, yeah, about 2015. It could definitely get there. All right, Merlin, how do you can I have access? It's in the description to the video. Yep, there's a description in this video. Thank you, Big Ed. So many fish in the water. Why chase? That's a great way to look at it, Tofi. Yeah, it really is a great way to look at it. So many fish, why chase Nike? And for me, this audience who's mainly regulars know me. Your odds, and forget about just my perspective, but I think if anyone disagrees with this, then you need to stop trading. Okay? If you disagree with this statement, you have to stop trading and switch to another profession. And the statement is, your odds of making money are far better going with the trend than against it. Simple and easy, right? Far better going with the trend than going against it. And in this case, buying Nike, you're going against the trend. Yep, absolutely. Oh, thanks, MTB. Appreciate it. I've only been looking at charts for 28 years, so I still am learning. One thing I like to keep a lot of statistics about my trades and things I've done, and I'm an analytical person. One thing that I wish I could have kept track of is how many charts I've looked at in 28 years. I always generically say, it's been millions. It could easily be in the tens, if not 100 million charts. I mean, I don't know, each show we do, I'm looking at not only like a weekly of Nike, but we're looking at the daily. So there's 2 different charts, and we're scanning different perspectives. Just practice. Chris says, when's earnings? For Nike, it was last night. Actually, they came out with earnings this morning. So one great thing about TradingView is you can go here, and you can see the little E's at the bottom. So Nike's next earnings will be on September 30th, unless they move it. But yeah, that's a great little feature that TradingView has. You can see the little E's at the bottom, and it also shows you dividends. Big Eb said, I would chase United Health before Nike. Yes. And Big Eb, just curious. That's a great comment. Why would you choose United Health versus Nike, right? It's an innocent question, but I think I know how Big Eb's going to answer this one. And I'm going to give you some time, Big Eb, to type it in the chat. Too bad I don't have a microphone for you, but it's just so, Hendricks, you can have an idea of what we're talking about. Like, this chart looks atrocious, right? This is Nike's chart. Bad, 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 bad. Now let's look at United Health. Bad. Like, are you kidding me? Bad. And if you go from its peak to where it is at today, it's currently down 52%. So not as bad as Nike, but, you're bottom fishing here. You're totally bottom fishing just like you would be with Nike. But the question is, which business has more revenue? Which business is making more money? And which business is somewhat protected from tariff talk and trade? Nike's business. If Nike had to make their clothes and their shoes in America, Nike's a $10 stock. Their profits are going to just evaporate like P. Diddy's career, right? It's going to be atrociously bad. United Health, obviously they've got some issues with regulators about how they might be, messing with consumers and bad practices, but this is one of the largest healthcare providers in the world. They have massive revenue that's zero impact on tariffs. So I didn't see Big Eb get to type in there, Big Eb. I don't want to put you on the spot, but yeah, I would rather bottom fish with this one. And in full disclosure, I am long United Health right now, and I'm just doing the wheel strategy, selling covered calls against it, generating premium, getting 1 to 2% a week on this bad boy, which is great. Honestly, just keep going sideways. Love it. Keep going sideways on United Health, and I'd be totally fine. But I think you're going to see UNH slowly trickle and start to move back to the upside. Such an extreme discount for a company that makes massive, massive money. Okay. I want to get to this last one real quick. So Liz, you asked this question the other day. You said, can you give your insight into market on open and market on close orders? I think I understand what they are. Can any meaningful conclusions be drawn from them in terms of trade direction or even trade opportunities? It seems to me they do not provide complete information. Yes. So basically, there's an auction process that happens before the market's open, and you're essentially telling the market participants, the people in the auction, I just like to buy at market. Whatever it is, I'm doing a market order on the open. And here's why you should never do it. Because if we get an influx of buyers, right? Let's say you got an influx of buyers. Well, actually, let me ask you guys a question. If you go to, let's say, these big car auctions, right? You go to the giant car auction, and you've got one bidder for a car. The guy selling the car comes out and he says, okay, the car's $10,000. And there's one bidder, and he's like, $9,000, right? Not a lot of excitement. Now, let's do what, I forget what the name of the auction house is, but there's like a huge auction that goes around there. Anyway, now you go to these big auction halls, and there's 1,000 people in there, and they've all got their little paddle. And you got your auctioneer. Same car comes out, and the auctioneer's going, we're going to start the bidding here, $10,000. I got $10,000. I got $11,000 over here. Meet him. There you go, VB. Thank you. We got $11,000 over here. I got $15,000 over here. And they create this hysteria, and it just drives that price up. That car was only worth $10,000, and all of a sudden it's like, it sold for $75,000. Emotions got the best of you, and the market participant the seller can just kind of keep moving their price up. In trading, if you send a market order while market hours are open, you're going to get filled at the best possible price. It's called the NBBO, National Best Bid and Offer. You're going to immediately get filled at the best price. If it's a illiquid marketplace, though, you could get a lot of slippage, right? Meaning your market order could slip you. If you send an MOO order, a MOO order, market on open, it basically is telling them, I'm going to buy a market order for this no matter what when the market opens. Whoever is setting that price can see the order coming in. And they're going to go, oh, I have an influx of buyers to buy it at $10. It's now $15. Don't ever use a market on open order. You wouldn't want to trade that instant the market's open anyway, right? You just don't have enough data, too much risk involved. Now, a market on close. A market on close order is actually can be a good thing. And the way it works is, let's say, for example, Big Eb. He's an avid golfer, I've come to learn. And he's out on the course. He left his phone at home because he just doesn't want to be bothered. He's trying to get away. He's out there with his buddies golfing. And before he leaves to go golf, he says, look, I'm going to buy NVIDIA, but I'm also going to do a market on close order for the day. And what that means is right before the market closes, a few seconds before the market closes, it will automatically do a market order to close that position. So that's not going to an auction per se where market makers are going to see it. That's just saying, I want to be out by the end of the day. Cut me loose. So a market on close could be very beneficial for somebody who just wants to be out by the end of the day. So I hope that helped, Liz. Personally, I don't feel like there's any benefit to either one of those. Certainly not the market on open. I think that's a fool's errand. You shouldn't do it. Market on close can be beneficial if you absolutely just don't want to take a trade home overnight. There we go. All right, last part here. I didn't realize how long we're going to go. It's funny because I came in up here today going, I don't have a lot of material to talk about today. I figure I'm going to do like a 30-minute show. We're already at 47, and I got to get to Jason's question. And I'm going to try to answer this in a polite way. Jason says, could you share more information about trades you're in so we can follow you? No. Okay. First off, I don't want you to follow me. I'm not trying to create followers that mimic my trades or ride my coattails. I try to be as transparent with you just as stuff that I'm in because I want to be clear, transparent, and not a liar like Voldemort out of Chicago. I'd like to be, no problem, Big Eb. Good to see you. So I tell you trades I'm in, and I'm specifically talking about an account that I've earmarked for this show. So what I will do, and you asked if I will share more information about the trades I'm in so you can follow me. I will give you some information about those trades. I'm not going to tell the amount of contracts because some of them are rather large, and I just don't like that kind of exposure. But I will walk you through what I'm in. And here, oops, where did it go? Open trades. So right now, you guys know I'm long MicroStrategy. So MSTR, I have two different positions on that one. I have 300 that are long from 375, and I've got 300 that are long from 400. So I'm actually kind of mid-pack right now. I also have United Health. I have UNH, which I've been long from 305, and I'm selling covered, or 305. I'm selling covered calls against that position. I'll talk about that here in just a second. I have Circle puts. Now this is the only one I have that's like underwater. This thing's bad. I doubt I'll turn a profit on this one, but we shall see. Circle, I just cannot believe it's this high, but I have the 120 puts, and that's also for July. So I do have plenty of time there for that to come to fruition, and it might, but the odds are pretty slim of that happening. I also have HIMS, which I did get an interesting comment from a viewer, which was, isn't this a drug stock? And you said you don't trade drug stocks. I go, ooh, man, that's a great question. One of the main reasons I don't like to do anything with drug stocks is FDA approval. So FDA can come in and say yay or nay to drug production. Typically, HIMS does not do anything with FDA. So they're outside of, they don't do any FDA drug approval. They're literally licensing other things. No, Oliver, I don't use the products, you jerk. First you call me, what do you call me? You call me the naysayer, the doom and gloom, and now I'm a HIMS guy. Look, I have a receding hairline, which I'm somewhat insecure about, but I'm not going to take any ED drugs or whatever the heck that HIMS thing is. Yeah, I'll just show me your position is 1990. Wouldn't that be nice? We won't be showing account balances either. That's just my personal thing. Anyway, HIMS, the main reason I went into HIMS is this was a shock sell. This is what panic sell. And you can tell by the climactic volume here that happened on Monday. I mean, this was absolute panic by people. I like that type of stuff. Is when people panic and there's huge volume spikes, I'll take a shot at. So I sold the 40s, which is where my cursor is at here. And those expire. All of these from now on expire this Friday, except for the Circle one, which goes all the way through till July. What else do I have in here? I have the MicroStrategy. So you guys know I currently have MicroStrategy covered calls on all 600 shares expiring this week. In a perfect world, my hope, and you guys know I hate that word, my expectation, my ideal world would be that MicroStrategy goes all the way up here, right? It moves all the way up and closes where this red line is, just below 400. I would love that, because if that happens, I'll sell the 420s expiring next Friday and keep stair-stepping up. That to me is when you make the big bucks in a wheel strategy, right? I know you've got a lot of wheel strategy people in this room, and I think Tofi is running wheel strategy stuff in the Discord room for those of you who would like to know more. So I'll just plug Tofi there on his thing. Yeah, MTB 420. Yeah, absolutely. But ideally, I'd like to just keep selling weekly options against my position and have MicroStrategy run and get on a nice run where it just keeps on going, and I stay ahead of it, selling call options against it at higher prices, collecting more and more premium per week, plus I get the gain for the underlier. This is what sets up a great, great trade if you get a runner. No, Rob, I don't. I'm not a spread trader, and I don't know why. I guess I'm just a simpleton. I don't have anything against them. It's just there's a complexity to it that just kind of annoys me, and I'm more of a directional trader, right? So if I feel like something's going to run, I'm going with it. All right, what else do I have on this list? I have SMCI. I sold the $40 puts on Monday, expiring this Friday. Excellent trade. The premium was so good. Premium was so good, and look what happened. That's not the line there. Let me put a line at $40, so that will be, so you can see where the line is. Okay, so that's the $40 strike on SMCI. Suffice it to say, I'm not going to get exercised tomorrow, right? I really doubt that's going to happen. But this was a great one. This was over 1% for the week. I did on, oh, I'm sorry. Thank you. Thank you, guys. Phenomenal move up here. Absolutely just ridiculous how much that thing moved in a short window of time. I mean, granted, would you rather have bought this and held it and rallied? Yeah. But that's not how I'm playing it. I mean, you have this Harami formation that happened on Tuesday and then just been screaming ever since. So that one, very happy the way that turned out. And this is the problem with the wheel strategy, is someone is bound to tell me, well, why didn't you just buy SMCI if you knew it was going to go from, $41 to $49? Well, I didn't know it was going to go from 41 to 49. I felt like it was going to bounce because it's been channeling for the better part of a month. So yeah, I think $40 strike was perfect for me. And I'll collect my, 1+% and be happy with it. Next, Tesla. I've got the 320 puts on Tesla expiring tomorrow. This one could happen. Right now, it's trading at 325. It's up a little bit in the after-hour session. And I did it not really off of much technicals. It was just, it came back down to the zone, and I was like, okay, I'll go with Tesla. And I don't remember. I think it actually was yesterday that I opened this one, and I got pretty decent premium for just a couple of days. That one might get me. What else do I have? So I've got the covered calls on UNH. So I'm long UNH outright, and I have covered calls against it at 307.50. If it gets above 307.50, fine, I'll sell puts again. And the last one here is USO. We talked about this the other day. I mentioned that, I do think that this conflict is not over yet. I don't believe the ceasefire is going to happen, and I do think you'll see oil surge again. So even if I was exercised at $71, I'd be okay with that. And I know some of you feel that oil is going to go to 60 and 40. Cool. That's great. That's great. That's people's opinions. And my opinion is it's going to bounce, at least in the short term. So I'm fine to take it at $71. Margaret says that's a lot to watch. Good size portfolio. That's just one account, Margaret. I've got a bunch of other accounts. But it's not that much, really. I mean, there's a couple in here that are pretty sizable positions, and those are the ones you get a little bit nervous on when you have one contract or 5 contracts or even 10 contracts. It's not that big a deal, depending on what it is. So you look at SMCI, which is a $40 strike. You got 10 on that. It's like, that's no big deal. You can get to 30, 40 there and be okay. It's when you have something like Tesla, when you're throwing a 10 lot around, or United Health. Tesla would be more of a risky one when you got a 10 lot on. Now you're dealing with a pretty large position, and that's time to get a little bit nerve-wracking. You're late with the Voldemort one, John. Voldemort. Voldemort will just, I see what you're saying. I hope you're not referencing that, but like what Voldemort would do is just be like, I bought here, I sold there. Anybody ever audits me, I'm glad to show those trades. And maybe we do it as a paid service someday, but maybe someday I do it where this is all done live and we do it as subscription based, but I don't know. It's not really my thing to do. So there you go. That was for currently, then that's just for this account, right? I put the Trader Merlin account that was for Jason. So I want to share information about the trades. That's it. And I generally am pretty open with it. Obviously, most of this stuff is going to expire on Friday. The vast majority of this is going to go away. And then on Monday, I'll kind of let you know what the new positions are, because I'm still going to have MicroStrategy in UNH, most likely. And then we'll see what opportunities arise next week. It's the beauty of markets. Margaret says Lambo picks would help. You know me well enough, Margaret. Lambo would not be in my garage. I mean, the only way I would have a Lambo would be if I had so much disposable income that literally you'd have to treat your Lamborghini like a Toyota Tercel. A junk car I just don't care about. And it's not for me. I don't need it. So, do your accounts all mimic one another? Or are you diversified into other sectors? Other sectors. So I have, there's another account which I'll share with you guys at the end of the year. I talked about it yesterday, where I am just doing a wheel on one instrument, and that is IBIT. So I'm doing one on IBIT. Some of the other accounts I will double up on some of these positions or go even heavier on those positions. So there is some, right? There is some overlap. For example, right now in another account, I do have SMCI, Tesla, and MicroStrategy that I'm trading, but I keep those ones out of this discussion because I'd rather just focus on this one account for you guys. And, IBIT, it's been a great wheel strategy for the past couple months. The premium is not great on the options, but it's been pretty darn good. So I do a wheel strategy on that one, and we will see what the end of the year numbers look like. It was really an experiment to see how you could do with the normal 1% strategy, which I do with like SPY and the broader market ETFs, which has not been the greatest premium, and I do that on a monthly basis. IBIT I do on a weekly basis. Lambo next year, Cybertruck. Now, maybe I will buy a Tesla at some point, but right now, no. No Bentley for me either. No Bentley. I think Bentley's a colossal waste of money. What's the point? A car gets you from point A to point B, and you're going to spend $200,000 on it? I don't know. I just think that's just unnecessary. My neighbor did buy the GMC Yukon. Is it Denali or Yukon? It's the SUV, like the Suburban. Oh, it is gorgeous. I was like, maybe. 80 grand. I'll wait. All right. Let's see what's happening for mañana. We go to our calendar. We're not out of the woods yet with economic data. Obviously, there's important stuff happening tomorrow. Very important stuff, by the way. That's that core PCE price index number coming out. The GDP today was bad. All expectations right now are that core PCE will come out at 0.1 and stay right where it's at and kind of traverse sideways here. That would be very good for those of you who believe that rates are going to get cut in July. So we shall see how this all pans out. But that's really your most important piece for tomorrow is going to be the core PCE price index. You do have durable goods orders. You do have, hold on, that was today. Where did my chart disappear? There we go. Durable goods orders were today. You have personal income and spending, that's what I meant to say, as well as University of Michigan consumer sentiment. Lisa says those big SUVs suck up the gas. Yeah, but I don't drive much. Who cares? Suck up the gas. I think my truck gets in town I get like 15 miles a gallon, which is terrible, but I don't drive. I fill up my tank probably once every 6 to 8 weeks. That's how much I drive. I ride my e-bike everywhere else. All right, that's going to do it for me, everybody. We've traversed the 1 hour show for today. Again, for those of you who sent in questions, Liz and Jason and all of you that are chatting in the room today, thank you very much. I appreciate the participation. You guys mentioned the Discord room. You could go down to the description in the video. There's the Discord room. It's kind of free for all as long as you guys keep it calm and not fight with each other. I'm happy to keep it open. I comment occasionally, but I've got a ton of stuff going on. Trading Academy is closed? No. Trading Academy is open. Absolutely open. Yep. Trading Academy is open. Okay, that's going to do it for me, everybody. Have a fantastic remainder of your day. If you want me to discuss something on Friday's show, email it, tradermerlin@gmail.com. I will see you tomorrow. Take care.